ladies and gentlemen. We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. This is your first time tuning in. Welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve. So you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Monday, everybody. I got a very special guest. I'm going to bring her up here in a couple of minutes, and we're going to talk about my literal favorite topic, and that's insurance. And you might be like, you're joking, right? And I'm not, because I think it is the number one mistake that almost all transportation providers make, and it could literally cost you your entire business. But we're going to get into that in a second. But it's Monday. You guys know what that is. It is a dry van analysis today. This Week in Freight, powered by my friends over at DAT. You guys, we just break down freight lanes because, like, rates are going to change, capacity is going to tighten up, things are going to happen. But, like, ultimately, what are we going to do about it? And I think a lot of us, again, we overlook what we're actually trying to accomplish with pricing out freight. And I'm here to talk about how I personally assess lanes as I'm going out there and bidding on freight in the open market, because, your boy actually moves freight. So that's why you guys should probably tune in. But today's lane, it's back in my old stomping grounds, La Crosse, Wisconsin to Oklahoma City, Oklahoma. This is for a dry van. Again, I always look at the miles right away, you guys. We are looking at 820 miles. So again, if we are looking at what day of the week this is shipping on, Thursday or Friday to Monday, exponentially more expensive out there than if it ships Monday through Wednesday. Again, that's right at that 2-day transit. I'm not going to go in and talk about how some people can do it overnight, but we're here to a general rule of thumb, 500 miles a day. This lane, although you look at the 1 year mark here, right? It's about $2,400, and in today's rate is about looking like it's going for about $2,600 on this. So you might be like, how big of a difference is that really? That's $200 on the 1 year average. But if you look at this here, look at last March and April, $1,800 to $1,900 and $1,800 respectively is when this lane was moving for. And this looked like it was down in the slow season there, because if you peel over to May, it's about $1,800, June at about $1,900. So that 120-day period there, it's going between $1,800 and $1,900. Well, look at where it's at right now, you guys. 25, 25, 26. Again, I went to public school, so my math is a little off, but that's like $700 to $800 more a load is what this is going for right now. And if you pay attention to this show and you watch it, which, I mean, who watches a freight show unless you're in freight? This has I personally think, like, yes, fuel prices are a big deal here, but this was going up in February. And if you paid attention to the non-domiciled CDL stuff that is going on out there, Oklahoma is one of those states that is, like, legitimately putting people off the road right away if you fail ELP. Okay. So that is my assumption on why freight is exponentially more expensive going into that market, and why you saw that happen back in February there. And you could kind of see it go right lockstep and key with how this lane has been performing here and the direct correlation into that. So, like, if you've been moving this lane for a while, you're probably very aware that this market has completely flipped on its head. If you haven't, for some reason, moved this lane and you're going into this, and you might hear from your prospects, hey, we were paying $1,800 to $1,900 on this lane this exact time last year. What happened? We know about fuel. Everybody who watches the news knows about fuel. So what's driving this price increase? I mean, provide them with some of these articles, you guys. I put the links to every article I break down on this show, provided to them, show them, like, hey, this geographic region is being it's being affected at a higher rate because the state of Oklahoma is enforcing this. It's a law, so, law should be enforced, but they're enforcing this law. That's going to naturally drive capacity away from some of these markets out there. So if you're moving this lane right now, it looks like this lane has essentially stabilized since about December, because it was at 2,400. It's at 2,600, and it looks like it's kind of stabilized over that about 5-month time frame here that we're looking at. So to me, outside of a peak summer rush that comes in here, this lane is probably going to flatten off here for the foreseeable future. I would be talking to your customers about this, though. This is probably going to continuously be the new normal out here on this lane. If you're in a spot market situation, truck in hand, you're in a really good spot from a pricing perspective. But if you have that contracted rate, and, again, there's a lot of people who are like, oh, if you're contract plus fuel, you're in a really good spot. That lasted all of like 48 hours. Rates are going to continue to rise as fuel rises out there, you guys. So if you're in a contract plus fuel perspective, you're in a broker, some lanes, you're probably going to be in a really tough spot here coming up. Again, I think that this lane looks about as stabilized as I've seen from some of the lanes we've broken down here lately. So if you're pricing this out with your customer, if this is a new lane, new region for you, I would talk to them specifically about ELP, and why that is driving rates up going into specific regions coming out of the Wisconsin market here. But that's going to be it for the dry van lane analysis here, you guys. If you want your lane broken down, like I always say, I just need you to email my team, podcast@thefreightcoach.com. Shipping city, delivery city, trailer type. That's all I need, you guys. I don't have the time to research what this could possibly be from a prospect in there. And then frankly, you guys, we're all going after the same shippers at the end of the day. But I promise you, I'm not doing that. I just want to help you guys assess lanes for what they actually are, as opposed to the headlines that you read out there by people who are trying to sell you a service. But I'm not. I just want to help you guys win freight at a high level out there. But that is going to be it for that. And let's get into my favorite topic of all time, and that is insurance. And I am glad to have my good friend, Michele McGinnis, back on the show. Michele, thank you so much for taking the time to join me today.
Thanks for having me. I'm a loyal listener. I appreciate the chance to come back.
Yeah. You and every insurance friend of mine that I have in this industry, I always laugh when I say it's my favorite topic, but it's as an operator, as a business owner, I know the effects of not having proper insurance and what that can do, because unless you got millions of dollars in the bank, do you, right? Do you, but statistically speaking, overwhelmingly large percentages of businesses are 30 days from going out of business every day due to cash flow constraints. And then you throw $150,000 claim on top of that, it will bankrupt most organizations out there. So I look at, specifically what you're building and have built already at My Cargo. It's to me, it's just music to my ears, because it's such a cost-effective way to protect your business. And if you look at it, additional insurance policy or stuff like that might cost you $80. But I look at it is if you don't do that and it's an $80,000 claim, I hope you have the capital to pay that, because if you don't, you're going to get sued.
Right. That's the birth of the genesis of this business was people can't afford not to have it. And we offer a single trip instant spot coverage for anyone that has one truck to fleets that have hundreds of trucks. We do $2 million truckload. We're now going cross-border into Mexico. Since the last time I spoke with you, we have a new underwriting partner. So we have increased our limits. We offer air, ocean, rail, and increased our limits, like I said, with truckload. I would say most of our business is directed from freight brokers, whether they are purchasing it on behalf of their shipper or directing their shipper to us. But I also do a lot of work with carriers because we're integrated with the load board. So I get a lot of people that call me on the day-to-day basis about specific loads.
I look at with you guys working with brokers and carriers alike, and how many carriers and brokers out there do you think, and again, you might not have the numbers in front of you, how many people are operating with underinsured or the wrong insurance on any given day, do you think?
I don't have the exact statistic because it's a moving target depending on what claims are filed. But it is a large majority of shipments that are moving underinsured, or they're rolling the dice with no insurance, or they're hoping that excluded commodity they're carrying won't get discovered. And they may not even know. I'd like to give human beings the benefit of the doubt. who reads all of the fine print? You know, when you're signing up for your cable bill or you're buying something and there's a warranty, are you reading every single line? Probably not. So I'm going to bank on that most people aren't reading their insurance coverage or their policy to see what's excluded. And we offer all risk. So one of the things that I love telling people, you know, to err is human, and we cover driver error, and we cover acts of God. You know, we can't control Mother Nature, and we cover theft. And as we all talk about, or is always being talked about in the industry right now, I think it's the sexiest topic is theft. So yeah, you are rolling the dice if you aren't purchasing this insurance, and it is first coverage. So if you if you don't want to touch your policy right away, you can use ours. It goes from $1 to the total value.
Yeah. It's, you know, I look at with the amount of freight that we move personally, and I think it's going to become a very harsh reality for a lot of providers out here as capacity seemingly tightening up there in the market for, you know, in a lot of markets. It's not just pocketed anymore. It's seemingly hitting up multiple areas of the country right now. And what I think a lot of people are going to come to realize is not, there is no more rolling the dice on certain situations. And, you know, I look at it when it comes to high value freight, because like we move a lot of it, right? Like one of our main primary shippers, everything's 150, 250, 300, sometimes $400,000 in cargo value that's out there. Not every carrier runs with $150 or $250,000 in cargo insurance. Now, I primarily do open deck freight, flat steps, Conestogas, and such. So like there's a higher probability that those carriers cover and have higher cargo policies that are out there, but not everybody does. And when capacity starts to tighten up out there, your options are going to be limited, and you need something like this in your back pocket to be able to go in there and purchase additional insurance. Because like, if you don't, I mean, again, like I want people to understand, like, you're going to get a bill for like 150 grand if anything goes wrong, because the carrier's insurance is probably going to deny everything. They're going to probably go with the fact that you knowingly and fraudulently loaded me with a high value load, knowing our cargo policy was only 100 grand. And if you didn't purchase anything in addition to that, that's on you. I would only assume that is how that would go.
Right. You know, that this is you mentioned capacity a lot, and this is a great tool to solve that issue, because even carriers that you work with on a regular basis that you know and trust, and that's important. I hear how you always emphasize relationships and trust and trying to use the same carriers. Doesn't make sense for them to carry a $500,000 policy if it's being used 3 times a year. But it makes sense for them to, of course, go after those loads so they can make more. This gives them the ability to have it when they need it without carrying that annual premium that goes along with that higher value insurance.
So what about the brokers out there that they might be startups, they might not have insurance at all, they have no regular cargo policy, because, you know, like by law, you don't technically need insurance as a broker, but you better have it if you want to move actual freight for people. Like, I'm just speaking from experience here. Are you able to go in, and especially as you're building up your book of business, right? Like, as somebody who's bootstrapped their company, I know the importance of stretching $1 into $10 and stuff like that. Can we come to you and just buy it on a shipment by shipment basis? You know, because it's like, there might be a build with most shippers. There's a buildup phase. You might get one shipment 1 week. You might not see something for a couple of weeks. You can't justify the $1,500 a month insurance bill that comes along with it. I'm making up numbers here. Don't use that as a barometer. But am I able to come to you, Michele, and be like, hey, I just need this one. It's a $27,000 load of plastic resin. I'm, again, making everything up here, you guys. This. Can I come to you and buy cargo insurance for that one policy?
Yes. And you can do it in seconds. There is no sign up. You don't have to create a profile. You can go in and simply purchase with the information you have on a bill of lading. You can enter the value, the commodity, where you're going to and from. You hit submit, and you pay for it with a charge card. and you will have a certificate of insurance delivered to whatever email you input in the process. So you can provide that immediately to your shipper. You can do it on your cell phone as you're pulling in. Because I know a lot of times too, although typically carriers and brokers need to prove they have insurance perhaps before they get the load. But I get, then maybe that carrier backs out at the last minute and they choose another one, and I'll get a phone call and saying, I need to get this now. I'm like, great, let's purchase it together. So it does take seconds. And yes, you can come in without you're right. There is no requirement for the underlying cargo policy to exist. So they can use ours in lieu of that.
Yeah. And to me, that is, it's such a massive value add, because I don't know if enough people actually understand how expensive it is to like get a business off the ground and how much work. And then I just don't like, for me personally, it's like, I don't want to see anybody get to the finish line with a customer or a prospect of theirs. And then the prospect's like, hey, we need insurance for this load. You never sent over anything. And you're like, where do I turn? I don't, so it's like, or prove that you have insurance. And I'm like, all right, it's only, $30,000 in cargo. I'll just go buy $100,000 policy. It's going to cost me X amount of money, but the price you need to pay as you're kind of building up. And, for me, I just don't want to see people get to that finish line, Michelle, and then have them not get an opportunity. Same with carriers, right? Like you're talking about it. They're going in there and they have that direct shipper, and say it's a food shipper, it's reefer, it's expensive. It's 170,000, but they only carry 100,000 in cargo. They don't know what to do. It's like, hey, I'm only going to be back in this area 3 times in the month, and I would love to have this be my haul out. Now you can just go in and buy that additional insurance on a shipment by shipment basis. You don't have to increase your cargo to 200 grand. It just opens up so many more opportunities for you. And it's such a cost-effective way for you to go in there and get additional revenue for your company.
100%. And to your point, a lot of times these moments don't happen 9 to 5, Monday through Friday. They happen in the evening, they happen on the weekends, different time zones. And as it's 24/7, I hate to sound salesy, but we get a lot of business on the weekends and evenings because of that. Even if you have a great insurance broker and you want to increase your premium, that typically can't be done in a few minutes.
Yeah. No,
speed's important.
Yeah. No, speed is everything, right? And especially, like, it's always important with established customers, but especially in the beginning phase of it, right? Because it's like, if you can't produce those documents within a certain time frame, they will find somebody else that can. And I know everybody wants to talk about how the market is doing everything that the market's doing right now. They still don't have a shortage of providers, right? Like, there is plenty of people in their network. If you can't provide that document to them and they need it within a couple of minutes, like, you're done, right? Like, they're going to go to the next provider that's out there. And it's like, with where things are from like a tech perspective, this is what I mean when I tell people, like, smaller providers are now on an equal playing field with the mega carriers, the mega brokers out there. We have access to all the tools that they may have only had access to at a certain point in history. But like, with where freight tech is, you can pack such a larger punch in the market now and stay lean, right? Because it's like, again, do you know the average price difference? And again, I know this is like a company by company basis, and there's a lot of factors that come in between $100,000 cargo policy and like a $250,000 cargo policy.
I wish I could tell you, but I don't, because I don't sell the annual policies. But I'm pretty sure that carrying that for the year and not needing it all the time is too expensive.
Yeah.
So if that $100,000, let's say you're carrying $100,000 and you only need $175,000 twice a year, chances are buying it for those spot coverages when you need it those 2 times are going to be less expensive.
Yeah. No, I agree with that. So you were talking about, obviously, with cargo theft, and that is the topic of topics, and it's going to continue to be the topic for the foreseeable future. How does that work? In the unfortunate event, one of these shipments, something happens to it, how does that claims process work?
You can file the claim online with our underwriting partner, Falvey. They have a dedicated team that is local in their office, and they solve their claims under a month. They are so fast, so
Yeah.
helpful. And I usually get a phone call, which I appreciate. I like to know what's happening, but I just direct them. I say, go to the website, file it, and you'll be contacted within 24 hours. Because I know that everything is urgent. One thing I have learned in the last few years, brokers don't leave messages. They just keep calling. And it's like, I don't even need voicemail because no one's leaving a message. And claims, when they start, it's urgent. And I always tell them it will get solved. It will get handled. Your hand will be held. And we've had a great, I can't think of the word right now. We've had a great process the last year, especially.
So how does that work? You had brought up Mexico freight, cross-border freight and everything. What was the main driver behind that? Because there are a lot of US-based insurance providers that don't touch anything, right? Like they just do domestic cargo insurance. They don't touch Canada. They don't touch Mexico. Was there like just like did you guys kind of see with where things were going from a tariff perspective, trade perspective, that like, hey, they're going to start moving and reshoring a lot of this manufacturing here to North America? Was that just like a natural thing? Or was there a bunch of your customers who are coming to you that are like, hey, we just want a big contract going into Mexico. We need this style of cargo insurance?
It was a little bit of both. I'd love to say that I have a crystal ball and I knew it was coming, but we kept getting more phone calls. We've always done Canada, intra-Canada and cross-border. And the cross-border into Mexico is growing steadily. I wouldn't say it's a rush, but the more you do, the more curiosity grows. And so I get more phone calls because you guys talk to each other. I always ask, how'd you find out about us? Oh, another carrier told me, another broker told me.
And to me, as somebody who's building a business and building a brokerage, and the opportunities that you have come and fall into your lap sometimes aren't going to look like the way that you plan and want it to be. And to me, it's like you need to have the process in place about what to do in the event something arises, right? And it's like, for you to be able, as a broker, for you to be able to have a way to secure capacity to go into Mexico, insure the load, actually insure the load out there instead of rolling the dice and stuff like that. This just solidifies your operation overall. And, for me, it's one of those situations where in today's environment, like as big of a niche guy as I am in open deck, I don't want to lose an opportunity because I don't know that this service exists out there. And you guys, like, I've known Michelle for a while. But like the product that she has out there is such an ease of use tool for you to go in, where it's like, now you don't have to think like, do I call my insurance? And then again, what if your insurance agent doesn't answer? I'm not saying that they're bad sales reps or anything like that, but what if you don't hear back from them for 3 hours and your customer needs a response right now? That's the reality of where we're at as an industry. So it's like, for me, knowing where to turn in these situations is such a value add to your operation, because if you don't, trust me, you guys, there are plenty of people out there who do. They have these resources. They can get back to their customers quick. They can organize. They'll have rates and everything locked in before you even know where to turn. And that costs you business.
It does. I mean, our tagline is "Freight won't wait, neither should you." And you're right. You can purchase online. You can call me, and we are truly the only product out there that is end-to-end Insurtech, meaning you don't have to talk to anyone. You can go online, quote as much as you want to see, how different freight that you cover will cost you. You can also don't have to purchase the entire value. You can purchase the gap, or you can purchase the entire value. Some shippers require the entire value covered, and they want to see it on paper. But it allows you to be nimble. Like you said, you can speed, coverage, and service. You can react quickly. You can purchase quickly and get on to the next load. And especially in this very fast-moving, global, and kind of frightening with all the theft, working with people repeatedly is such a bonus. Wouldn't you? I'm sure people like, I'm going to have Chris move it. I'm going to have Chris move it. And when they can't, I'm sure they feel a little nervous because they know that you're taking the time to do your due diligence, but not everybody does. So this allows you to always use the same carriers and just apply the insurance.
Yeah, I mean, anytime we're not using our core carrier base, yes, we do a very extensive vetting. We follow the same process every single time that we book a new carrier out there. But again, there is always that thought in the back of your mind because you don't have that trusted, hey, we've already done 250 shipments with each other, like that own synergy that you have between those two companies. And again, rest assured, 95% of the carriers that are out there that I've worked with in my career, stand-up individuals, they work hard, they do the right thing, but there is always that thought in the back. Cause like, I've just done this job for so long, Michelle, that like those negative preconceived notions are always going to be there. Right.
Sure.
But, to me though, it's like, you have to be able to get in there and not turn down freight too. Cause like that's to me, like the downstream effect that comes along with it is if you don't have a carrier for that, and maybe one of your core carriers isn't in the area and you do have to go out there to that open network to find another provider for that shipment. And then you don't know where to turn if it's a higher value cargo load, like you're costing yourself business. And I think that is more detrimental to a lot of people out there than they're even aware. But, like say somebody does have their $100,000 cargo policy, Michelle, through another provider, they can still utilize you for the additional insurance, even if their current broker or current insurance agency has the ability to do that?
Correct. They can, and we would be in first place for $1 until the entire value. Okay.
So there's no unless, they have any contract out there, like there's no, conflict of interest of, if I use ABC insurance agent for my cargo policy that I have for $100,000, but this one shipment's $170,000. They offer ABC Cargo Insurance offers additional insurance. I don't have to use them. I can go through you and my policy is still valid, correct?
Correct. And it happens more than you think because the shipper may require all risk and their current policy that they carry may not be all risk. And all risk is a little bit more robust because it covers acts of God, driver error, and theft. And so a perfect example of what you were talking about is we do a lot of frozen, chilled food. Yeah. And those carriers have a policy, but they might read ours and decide that, okay, this one covers a little bit more. This driver error portion is a little bit more protective of our merchandise. So we want you to use My Cargo 247 anytime you carry this frozen food.
Yeah.
It's not that exciting, but we do a lot of it. And we do it with carriers and brokers that work with large fleets and also just the one-off, the guy that calls me that saw it on a load board and said, can you help me out today?
That's one of those things that all the all risk coverage, again, as they're, and I've learned this throughout interviewing multiple people on the insurance side of things, Michelle, I don't know if enough people are even aware there's a massive difference between reefer breakdown insurance and errors and omissions and the driver error and everything, what that can do. I unfortunately know a couple of friends of mine who own freight brokerages that have paid that expensive mistake where it was like $100,000 out of their pocket to pay that claim because the reefer didn't break down. The driver mistakenly entered the wrong temperature. And then the product got denied. The carrier's insurance denied it because they're like, we only have reefer breakdown insurance. We don't cover errors and omissions. And the broker was stuck between a rock and a hard place because the customers looking at them. They're like, if you want to see our freight ever again, you better pay this claim. And it's, again, it's an expensive learning moment, but this tool, this ability wasn't as widespread as it, just a couple of short years ago as it is now. So it's like, you don't have, in my opinion, you don't have an excuse to not look into stuff like that to protect your business. Because I look at it, especially now, if we're like, say it's a complete market shift, everything's going on, people's risk tolerance shrinks right now. People's tolerance for failure and for not having everything in line really shrinks right now. So it's like,
can't afford it.
yeah, you have to look into this stuff because again, if something happens right now and you can't cover it from a financial perspective, it's just like, I just don't see people offering you and affording you another opportunity to continue to work with them.
100% agree. And I think the biggest barrier to people getting that coverage is understanding it exists. That is our biggest barrier to business. I think at least carriers, not brokers, that call me, like, oh, wow, I was calling you because I was looking into trying to find, I Googled cargo insurance and I was looking for a less expensive annual policy. I didn't know I could do this with you. That's great. And inevitably they come back and they're repeat customers. And I would love you to shout it from the rooftops that this, this exists because it benefits of course it benefits me. This isn't a hobby. We're doing this for an income, but there's no downside.
No, I agree. Michele, thank you so much for your time. This flew by. But yeah, how does anybody reach out to you though, Michele, if you want to find out more about what you got going on?
You can visit My Cargo 247 and you can also call us. My number is on the website. I can tell you now, it's 971-804-5254. And we do pick up the phone if in fact you need assistance.
Perfect. Michele, thank you so much. That is going to be
having me.
Yeah, of course. Hey, if you guys can't find Michele or My Cargo 247 out there, hit me up. I will gladly put you guys in contact with them. That is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.
Came back with a bang, window down, yelling out money, anything. Hey, ooh, got the foot on the gas, pedal to the metal when I'm getting to the bag. Hey, got the foot on the gas, pedal to the metal when the